All right, getting started. Chapter 19, Checklist and Learning Objectives. Introduction. The cost accounting system assigns operating costs to specific jobs. This module reviews the flow of costs in a job order cost accounting system through illustrated documents, journal entries, and postings to the accounts. Course competencies. Describe the terms and explain the concepts applicable to a cost accumulation system. Describe the journal entries and inventory valuation system for job order cost accounting. Learning objectives, describe cost systems and the flow of costs in a job order system. Use a job cost sheet to assign costs to work in process. Demonstrate how to determine and use the predetermined overhead rate. Prepare entries for manufacturing and service jobs completed and sold. Distinguish between under and over applied manufacturing overhead. Our checklist: 1. Read the chapter and or watch the mini lecture videos to see concepts explained. 2. Complete the SmartBook assignment to gauge your understanding of the chapter concepts and identify what concepts you still struggle with. 3. Review the example problems to see concepts applied. And 4. Complete the chapter homework assignment. All right, got it. All right, chapter 19, mini lecture videos. Okay, oh damn. Oh damn, there's a lot. All right. After reading the textbook chapter, you can watch the following mini lecture videos providing an animated PowerPoint mini lecture summarizing the chapter content.
In this episode, we will look at what comprises a company's cost of goods manufactured. A company's cost of goods manufactured includes three types of costs. The first are the costs of direct materials used. Direct materials are the materials that are separately and readily traced to each manufactured inventory item. The direct material costs of the inventory produced become cost of goods sold expense only when the inventory is sold. For example, the cost of steel purchased to be used to manufacture the automobile. We can directly trace the amount of steel that goes into each automobile. That automobile steel cost is not recorded as an expense until the automobile is sold. The second of the manufacturing costs include direct labor. Direct labor costs are the labor costs of the employees that are directly working on each inventory item, and those costs can be separately and readily traced to the finished product. For example, the wages that are paid to an automobile assembly worker. We know the exact amount of time and the cost of that automobile wage worker, so we can directly trace the cost to each automobile as it is produced. The labor costs that we pay to assembly workers do not become an expense until the inventory is sold. Finally, in addition to direct materials and direct labor, the last of the costs incurred to manufacture products are the factory overhead costs. Factory overhead is an all-encompassing title for any cost of producing that is indirect. Essentially, it's all costs of manufacturing except for the direct material and the direct labor cost. These are the factory costs that cannot be separately or readily traced directly to products. For example, indirect labor costs for maintenance, indirect material costs for cleaning supplies, factory utility costs, supervisory costs. These are all costs incurred to manufacture products, but they are not direct materials. They are not direct labor. These are costs that are incurred that we cannot trace directly to each individual product as it is produced. These three manufacturing costs are often combined as follows. Direct material and direct labor costs are combined and called prime costs. These are the prime costs incurred to manufacture a product. Often, we also include direct labor and manufacturing overhead combined and call those conversion costs, or the costs incurred to convert materials to a finished product. If we look at the flow of costs through the inventory accounts, recall, all costs of production are recorded as an asset in inventory until the inventory is sold. So we start with the beginning balance in raw materials, add in the cost of material purchases. Once materials are called into production, those costs are credited out of raw materials and debited over here into goods in process. The raw material account accumulates the cost of materials waiting to be used in production. The goods in process account accounts for costs as the inventory is being produced. This goods in process inventory account may start with the beginning balance. Then during the period, we add in direct material costs, direct labor costs, and all of the indirect costs of manufacturing. As inventory is completed and ready for sale, cost associated with the completed inventory is called cost of goods manufactured. And that amount is credited out of goods in process and debited into finished goods.
All right, goddamn it. Cool. I gotta take notes. Okay. Is that right over there? Oh, God. Ugh. Some of them retribution. Call restoration. Started off with went from revenge to retribution to reparations to uh, reformation to restoration. Fuck, okay. It's gonna work out in our favor because we're right. We're doing the right things. We are on the side of good. We are on the side of God. ADHD for a second, hold on. Minus cost of goods. Really quick thought, cost of goods manufactured, cost of goods sold.
Material purchases. The process account accounts for costs as the inventory is being produced. Labor costs and all of the indirect costs of manufacturing. As inventory is completed and ready for sale, cost associated with the completed inventory is called cost of goods manufactured. And that amount is credited out of goods in process and debited into finished goods. Finished goods is the inventory account that keeps track of all cost of inventory that is completed and ready for sale. So we may start with the beginning balance. We add in the cost of the inventory that was manufactured and completed. And as inventory is sold, we credit that account for the cost of the goods sold. So what you see here is that all costs of production are recorded in one of these three inventory accounts. The costs of production are reported on the balance sheet, except for the cost of the inventory that is sold. The cost of inventory sold is reported as an expense on the income statement. Cost of inventory sold Hello. This episode will discuss the preparation of the Schedule of Cost of Goods Manufactured statement. This statement is an internal document summarizing the types and amounts of cost incurred in a company's manufacturing process. Recall that all of a company's manufacturing costs are accumulated in the goods in process inventory account. This account may start with the beginning balance. All of the costs of production incurred during the year are added to it. Those costs include direct material costs, direct labor costs, and indirect overhead costs. As inventory is completed, the cost associated with completed inventory is taken out of goods in process with a credit, leaving it with an ending balance on the debit side. Seen it in equation form here, direct materials plus direct labor plus factory overhead equals the total manufacturing cost incurred during the period. Those manufacturing costs are added to the beginning balance in goods in process. If we subtract out the ending balance, the difference will be the cost of goods manufactured. Look.
Yeah, and also, this will come my way. It's not coming my way.
Process, manufacturing statement format, we can see the three costs of production, direct materials, direct labor, and indirect overhead costs, giving us the total manufacturing costs for the period. If we add those manufacturing costs to the beginning goods in process inventory account, gives us total goods in process. If we subtract out the ending goods in process inventory balance, the result will be the cost of goods manufactured. Looking at the detail of materials, we can show the flow of cost through the raw materials account. The beginning raw materials inventory balance is combined with purchases of materials to get the total dollar amount of materials available for use. If we subtract out the ending balance in raw materials, the difference is going to be the cost of direct materials that were used in production. This flow of cost through raw materials is normally displayed out and shown in full on the schedule of cost of goods manufactured. For purposes of brevity, it is summarized here in this schedule. After we list the cost of materials that were used in production and added to goods in process during the year, the next cost will be the amount of direct labor. This schedule will report all direct labor costs that were incurred during the current period. Finally, the last of the manufacturing costs are total factory overhead indirect costs. The schedule will list out all of the costs incurred of indirect production costs, totaling the amount that is reported as total factory overhead. Again, this is normally listed out in the schedule, but for purposes of brevity, it is not shown in full on this schedule. Once we show the flow of costs through materials to get the materials used in production, the amount of direct labor costs incurred, and all of the factory indirect costs incurred, added together, they give us the total manufacturing cost for the period. Again, those are combined with the beginning inventory balance and goods in process to get the total cost of goods in process, subtract out the ending goods in process balance, leaving us with the cost of goods manufactured. Seeing this next to a T account of goods in process, we are seeing the correlation between the beginning balance, cost added, the ending balance, and resulting cost of goods manufactured. The ending goods in process inventory, remember, contains the cost of unfinished goods and is reported in the current assets section of the balance sheet.
Like falling asleep right here. So I think like a little half hour, like lay down for like half hour. I want to at least do half an hour. I feel like I'm slacking off, but I'll do at least half an hour of work on something. So let me do that, lay down for a little bit, get some energy back, get the focus, and be able to continue working on this. Like, God damn, I hate how we get tired. I wish like people are like iPhones where I could just stick a battery in me, like fucking shove a USB-C cord up my ass and like let me charge, man. I'm like, I feel like it's a waste of time. And so let me charge like while I'm working. I could literally be working instead of having to like waste my time sleeping. Ugh. So lame. I don't know. Sleep feels nice, but the feeling of being productive for me is so much better. Here we go. What the fuck are you bounces on? Oh crap! Forgot I had an interview for that. Uh, Focus on more important things. Club lounge. The webinar, I thought it was like a one-on-one thing. It makes it not feel as special or important now. When things are specifically addressed to me for things like this, not just for opportunities. I don't want to just join a fucking mass herd of people. Just ugh.
Things for our United States and Canadian markets. So I know you guys were all invited to join me today on the call because you are matched with several of our castings, which is awesome. So we're going to talk about the castings and the type of talent we are looking for in just a second. I just want to make sure everyone signed into Zoom properly. If I happen to call out your name or even like your cell phone number, sometimes people sign in under like iPhone or Motorola or Samsung. If you guys could provide